Hey, Bulls and Bears, what is going on? It is Monday, December 27th, 2021. So many things to talk about, so many different aspects to try to connect together that are going to tell us what's going to be happening here in 2022. To some of you, it may look good. Others, this may be bad news. So please let me know down in the comments what you think about this. First of all, thank you for the feedback, though. Some of you had previously reported that my audio was low. So if you haven't noticed, my last few reports, I've got the headset on, so the audio should be nice and loud. Thank you for giving me that feedback. But we're only a few minutes to close. We've got the markets up again today. They're telling us we've got record holiday spending, but also on the flip side, we've got a surge in the people that are returning gifts. We're going to talk about why that might be happening and show you the numbers on that. But my prediction, yes, in 2022, the bubbles will continue to get bigger. Prices will continue to rise. Rising rents, rising home prices. The Fed's saying they're going to taper. I'll believe it when I see it. We'll follow that as it unfolds. Well, let's go ahead and start right here. We see the markets, all major indexes in the green. Dow Jones up over 330 points. So yes, the bull is continuing to run. The stimulus is being pushed into the system. That's not going to stop. The Fed, again, has been telling us they're going to take a more hands-off approach. They're going to taper. They're going to end all asset purchases in March. We'll see if that happens. All we have to do is very simple. All we have to do is watch rates. Not the Fed funds rate, but the actual interest rates, and more specifically, mortgage rates. But what's happening so far? Well, lower mortgage rates for the holidays gives homeowners the refinance savings they wanted. That's a headline out of MoneyWise. Of just the past 24, 48 hours, we see the Fed is continuing their usual pattern of keeping rates artificially suppressed. And it's very simple. You can try to guess what the Fed's going to do, or you could just look at the rates. When mortgage rates are allowed to rise, we know that the Fed is then letting more free market operations take place. Right now, we have zero free markets. Again, everything is manipulated, everything is controlled, everything is artificially being propped up or altered in some way or another. All right, as most of you know, the money printing, the artificial stimulus, the QE, the life support for all the banks, that has massively distorted the cost of living, prices, asset prices, property prices, you name it. Now, just a clarification, some people get upset when I say the term money printing or when I use that term. I think most of us know, I've said this hundreds of times, they don't actually print the money. Most money is in digital form. Less than 10% of all money in existence is in physical form, coins or paper. Most of it's just digital. So when I say printing money, I'm talking about the entire money creation process. Digital being most of it. 90+% is digital. Okay, and to those that have been on this channel that have heard that hundreds of times now over the past few years, I apologize, but there's a few, I guess, new people down in comments. They're saying they don't print the money. JJ, they don't print the money, blah, blah, blah. I know that. So I'm going to have to repeat that, I guess, maybe every week or two, just so the new people don't think that that we don't know what's actually going on as far as how money is created. So yes, it's all digits on a screen. Therefore, markets can be propped up to infinity. For example, home prices, just because they're severely disconnected from incomes doesn't mean they can't go up more. If it were not for the money creation and the digital QE that's being pushed out there, for example, 30% of all dollars in existence were created just in the past couple years. 30%. And yes, 90% plus of those dollars created were digital. I guess some people wouldn't even call them dollars. They're just digits on a screen. But for the sake of lack of a better term, let's call them dollars. Let's call them digital notes. How's about that? Digital notes. So let's go ahead and coin a new phrase here. Is anyone else using the term digital notes? I haven't heard anyone else say that. So these are digital notes being pumped out there, being pumped into the banks. Therefore, the banks can continue to loan out money when actually they don't have physical money in reserves to cover all of the loans that they're giving out. So ask anyone else if that makes any sense. Does that make any sense to you? Well, that's how the economy's set up right now. Let's talk about holiday spending. Holiday spending is, according to the sources, up big time over the past couple years. And this recent holiday spending set another record. Retail spending up 8.5% this holiday season. Well, one, do we believe the number? Two, is it only up because prices are so much higher for all goods and products? From this article, Americans flocked to clothing, which experienced a 47% increase in sales year over year, as well as a 32% increase in jewelry. Now, keep in mind, year over year, it's comparing it to the lockdown year of 2020. Shutdown, lockdown, slowdown, whatever you want to call it. Online sales were up 11%. In-store sales up 8% year over year. So again, let's try to figure this out together. Where are people coming up with all this money? Or are these numbers bogus? Right? We see 100+ million out of the labor force. The labor force participation rate has not recovered back to pre-sickness levels, pre-health crisis levels. Wages are not keeping up with the rising cost of living. Where is all this extra money coming from? Or again, maybe these numbers are completely bogus. Let me know down below. And I wouldn't put it past them. Sometimes they'll put news out there or numbers out there to make people think things are actually better than they really are. But with all the other statistics, the labor force, the wages, the rising costs outpacing wages, where is all this money coming from? Or maybe everyone's investing. Maybe everyone is investing in the stock market. Everyone's making millions of dollars. Please let me know. But when it comes to wages versus the rising cost of living, take a look at this next article. This one comes out of Wolf Street. Oops, Americans' big pay increases got run over by even bigger price increases. This is recent data. So the same thing that we saw throughout the year, rising prices are outpacing wages. And that should again be no surprise considering the types of jobs we have here in the US. They're mostly leisure, hospitality, and service sector jobs. A lot of jobs in the banking industry. The banks continue to grow bigger and bigger and bigger. So you're always going to see jobs in the banking and the financial industries, right? When you have an industry or a sector that's guaranteed unlimited bailouts, then you know there's always going to be jobs in that particular sector. But for the most part, it's not very good wages here in the U.S., with the typical wage being under $40,000, the average wage. With the median home price approaching $400,000, how does this continue? Many people are asking that question. And here's the labor force participation, a slight uptick here in November, but still way below where we were before the health crisis. Next, let's talk about holiday gift returns. Why are so many more people returning their gifts this year? Are people that desperate? Well, if they are that desperate, then why are holiday sales up? Why are more people spending so much more money? This is out of the business journals, and it cites a recent report out of the CBRE that returns this holiday season are up to $66.7 billion, which is a 45% increase over the 5-year average. A 45% increase over the 5-year average. Gift returns up over 45%, but yet sales are only up 8%. How does this add up? You guys let me know down in the comments, please, what you think. Thanks for being here. Keep stacking, stay well, stay safe. Bye for now, everybody. Peace.